Welcome to the Building Wealth with No Borders podcast with me, Lamde Elizabeth, where I'll be bringing you guests from around the world to share their strategies on building wealth. And today we are in London with ex-Goldman Sachs trader and founder and CEO of the Stock Pickers Academy, Debodun. Welcome to the podcast.
Thank you for having me.
Am I saying your name correctly?
Well, Debodun, Debs, Coach Debs, Debodun, if you want to put the Nigerian intonation on it.
What does it mean? I don't.
So I was born on Good Friday.
Okay.
So the full thing is Akin Debodun.
Okay.
Which basically, Akin means warrior.
Oh, okay.
Yeah. So I come from a lineage of warriors.
Okay.
And I was born on Good Friday.
Oh.
So it means the warrior came just in time for the festivities. Easter, yeah. Yeah, so my name actually ties into the fact I was born around Easter time on Good Friday.
Okay, because I understand Yoruba, but the name is not,
it's not a common one.
Okay, cool. All right. Anyways, let's get into you and your story. And what I really want to do in this episode is cover a lot on stock market investing, because that's not something that I've done in depth on my channel at all. And you are all about that. So I really want to cover that. But before we get into that, I do kind of want to start with your journey and your story. And I know that you have quite an interesting one. So if you can start all the way from like school, just explaining, what you studied, what you got, unis you went to, etc. That would be a good start.
Okay. My parents came to the country with nothing, and I actually mean nothing. When they landed from the airport, they stayed in a taxi driver's house. It was like that. It was like, you guys don't know where you're going, do you? It was that kind of situation. And then from there, they actually went onto the benefit system. They, stayed in an Airbnb, eventually were able to get qualifications for teaching. They both became teachers and did a bit of volunteering as well.
Can I ask, sorry to cut you off,
Go on.
Were they qualified, they come from Nigeria, right? Were they qualified in Nigeria?
No, they had degrees in Nigeria.
Okay.
My dad did psychology, my mum did biology. Okay. They met at uni. But when they came to this country, they had to do the PGCE, they did an MBA as well, but they went that route into working in education. So somewhere along the way, I was born. So I was pregnant. I wasn't pregnant, I promise you. So my mum was pregnant with me when they arrived, 1989. Bed and breakfast in Blackheath. And then very quickly got moved to the North Peckham estate, which was notorious at the time. So you'd hear gunshots regularly. You'll see people fighting. You'll witness armed robberies. You'll see a group of people going into houses, coming out with the goods. And it wasn't a one-off. So it was a toxic area that I grew up in. But because both my parents were very strong on education, they said, listen, the one thing we're going to make sure you all have is a good education and you take it seriously. So I learned my times tables with the cane. I knew all my times tables by the age of 6. I could recite them. I was also introduced to loss quite early. So I lost one of my good friends in nursery. And I was very conscious in nursery. As a 3-4-year-old, I still remember what nursery was like. So his family got burnt and then arson attack. So that's how they died.
In Peckham?
Yeah.
Oh.
So it was like my best friend in nursery. We did everything together. And then there was that. And I think the effect it had on me was to understand that life was precious, right? Subconsciously. And then taking my education seriously, when you know your times tables and how to spell the days of the week, I still remember this to Sunday. Those were the things that I started teaching other people in school. How to remember, how to spell Wednesday, how to do your 5 times.
When you were like, 5, 6, 7?
Literally. Because in school, you finish your work quite quickly. Someone asks you, from a very young age, someone's asking you for help. And then you're learning very early how to put things in a language that they could understand. So that skill has always been there. So I did well in school. My behavior was all over the place. That led to me getting kicked out of my primary school. I swore at the head teacher when I was 6. That led to a load of problems that led to me having to move primary school. In my new primary school, I promised myself I was going to be the geek, the good boy, the quiet one. And I was for like a month. And then you get comfortable with your surroundings and the trouble starts. That led to me actually being moved up a year in school because there was a no-nonsense teacher called Mr. Chamberlain. And they said, listen, we're going to put you in his class instead of separating you and making you learn by yourself.
I didn't know they did that in the UK.
Neither did I. So that happened and it led to me leaving primary school a year early. I got one of the top grades in the SATs, as they call it back then. Anyway.
Was it 555?
555, yes. And then I went to secondary school at the age of 10. It took them a year and a half to realize I was a year younger. So I was already in year 8.
Okay.
And then, I did my GCSEs in maths a year early, in year 10, which would have meant I'm actually doing it in year 9, if you look at the ages.
Okay.
And then I did all the rest in year 11, which again is a year early. And then I started looking at my maths A level. I went to...
What did you get in your GCSEs?
4 A stars, 7 A's, a B, and a C. So I took 13.
And your A stars, I'm guessing, were maths
and
sciences? No. Okay, what?
So the story with maths is I was extremely complacent. So in the mocks, I got an A star. And I got the highest mark out of year 10s and year 11s, even though I was in year 10. And then I just thought, I'll just turn up. I'll just turn up on exam day and I'll be fine.
You got cocky.
Yeah, complacent.
Okay.
And that happened with at least 2 or 3 GCSEs that were guaranteed A stars that ended up with A's. And the ones I actually did get A star in were, my highest GCSE was chemistry. Okay. I got 100%.
I think same actually. I love chemistry.
I got 100% in chemistry and I got 100, and my second highest was English literature. I got 98% in that. Okay. And then, what were the other ones? So chemistry, math, I keep saying maths because I wanted it so badly. So chemistry, English literature, RE, PE.
Okay, cool. All right, okay. So now A-levels.
A-levels, I actually did 6. So I did maths, I did further maths, I did additional further maths.
Oh.
Yeah.
Okay.
I did physics, I did chemistry, and I did economics.
Oh, wow.
Yeah.
So what did you get for your A-levels?
At the time, there was no A star.
Okay.
So I got all A's.
Oh, amazing.
So it would have, in today's world, been, I think, 4 A stars and 2 A's in the way they do it today.
Okay, that's sick.
Yeah.
So you buckled down with maths when you got to A-levels?
Oh, yeah.
Yeah.
It was the get back.
Okay, and then you decided to go where for uni?
University of Warwick. And I studied this course. The course was called Morse. So that's Maths, Operational Research, Statistics and Economics.
I see that course and I'm just thinking, there's just a lot going on right now.
Yeah, I only chose the course. I think I chose the course, not the uni. Because if you look at how many A-levels I did, I now wanted a course to match.
Oh, okay.
So it just seemed like a natural
But did your
fit.
parents not say Oxford, Cambridge with your A-levels?
I applied to Cambridge, but my predicted A-level grades is what killed me. My predicted A-level grades were like A, A, B, B.
Okay, fairs.
It might have been A, B, B, B. And I think it hampered my chances of getting in. And if I did get into Cambridge, it would have been economics.
Yeah.
And I know I would have hated it.
Fairs. All right. So why did you end up going into finance?
My older brother, actually, he went to Haberdashers and they used to have this program for careers. And he came across this organization called the Brokerage. So he ended up doing a 3-month internship at UBS in their middle office operations team. And I was curious. So he did that internship and decided that banking wasn't for him. But all the stories he was telling me, it was given banking is for me. I wanted to replicate
everything he didn't like about it, you loved.
Yeah. So I also applied to the Brokerage. Didn't really know much about investment banking at the time. I did a 3-month internship. After I did some interviews, I performed well at interview. And then I started at HSBC.
Okay.
And
what age is this? Is after uni?
This is before uni.
Okay.
This is the summer of
before first year.
Before first year uni. So I would have been 17 at the time. It was in Canary Wharf. Great place for me at the time. I'd never really spent time in Canary Wharf. And it was interesting because the start of the internship was photocopying. Yeah. And I was world class at photocopying. So when traders do a trade, they have to, well, back in the day, the paper confirmation of the trade, which is like a receipt, needed to be scanned into the computers so it was on the system. And that meant boxes and boxes and boxes of paper receipts that I had to scan, right? It was more scanning than photocopying, but the photocopying machine.
Yeah.
And the team of people with the team leader that did that job, they'll just scan like a few every day. And I came in thinking, the more I scan, the more I can get a full-time job and then get paid. That was my
Was it an unpaid internship?
Yeah, it was paid.
Okay.
It was paid. Yeah.
Okay, good.
I think in the end it was like about £3,000, which for me was a lot of money.
Yeah, that's good, man.
Yeah.
Before uni, that's definitely good.
Yeah, so I did that and listen, I was like a machine. I was literally just scanning and scanning and scanning and scanning. And then my A-level results came out and it was in the Evening Standard.
Oh, wow.
Yeah, because it was like, I was top.
There's so many similarities between our stories, by the way.
Yeah, exactly.
Even the brokerage, they gave me my first internship as well.
Melissa.
I don't remember what her name was, but mine was in insurance though, in the city.
Yeah.
But that was like my first internship. And that opened so many doors because going into uni with an internship, I had to a gap year, so mine was 8 months. That was a massive like game changer in terms of like getting more. So
yeah, big up the brokerage.
Yeah. If they're still going, which I think they are.
I think they are.
If you're a young person watching, you sign up to the brokerage.
The others like Windsor Fellowship as well, that they can sign up to. So my A-level results came out. It was in the Evening Standard. So I'm going into Canary Wharf now and people are looking at me like,
oh, is it?
Yeah. People are looking at me and I didn't know it was in the Evening Standard or it was going to come out that day. I'd obviously taken the photos and done the article, but they never told us when it will come out. So yeah, they took our pictures, but then said they'll write an article on results day. And I think they must have just updated the grades and then put it out. So my boss, not my boss actually, the boss of one of the other teams in operations who's managing more of the floor, he had higher responsibility. He walks up to me, he's like, "Is this you?" I'm like, "Yeah." He's like, "We need to get you on Excel spreadsheets."
Exactly.
No more photocopying. So from that day, I was on the desk.
Okay.
So I was doing stuff in Excel, learning how to price different financial derivatives.
Wow, at 17.
Yeah, I mean, I just completed 3 A-levels in maths. So from my perspective, this stuff wasn't even as difficult as some of the stuff that
That's actually true.
Yeah. So they got me doing some more technical work, but there were only like 1 or 2 weeks left of the internship. So I got a prize from the brokerage, intern of the year or something like that. But also there was a lot of networking going on. So brokerage used to enable you to network with people doing roles, the same kind of internships at different places like Reuters, insurance companies, the other investment banks. So that was the first time I really feel like I did a lot of networking because some of those people I'm still in touch with today, even though they've gone on to do different things.
Yeah.
So that's what, there was one key thing I missed out. So I got to go to the trading floor. And it was on a day where I think interest rates got cut or something and it was loud. And I said, yeah, I want a piece of that.
That's so funny.
Yeah.
Yeah.
I said, this is where I want to be. And I went back up and I said, how do I get down there? Oh, you need to do some internships at uni. So going into uni, that was my focus. I need a job on that trading floor. Because prior to that, I wanted to be an actuary. Okay. So I got told when I was in secondary school, there was something called being an actuary.
And that's where you make money.
And I asked, how much do they get paid? Because show me where the money is and I will adjust my interest like a chameleon. I will start learning that. £40,000. the way people look at $1 million now is how I looked at that 40K.
Definitely.
Because I knew what my parents were earning.
Exactly.
You know, we're talking 15K. Like, if I can do whatever it takes to earn 40K, I will be set for life. That was my thinking. So I will do whatever.
Hundreds.
And then when I got to uni and I, seen the trading floor, I realized, there's investment banking, there's trading, there's things that could actually, who doesn't want to buy something for a low price and sell it, right? Or work in that type of environment. So that became more interesting to me because my course at uni actually gave me exemptions on that Trero exams.
Oh.
Yeah, so that was also part of why I liked the course.
Okay, cool.
So I actually had to shorten my 4-year course to a 3-year course so that I can take up my offer at Goldman Sachs.
Okay. Interesting. All right. That's good. I feel like there's so many things that I'm just thinking like, oh my God, this is like very, very, very similar story. But what did your time in banking teach you about money, wealth building, if anything?
So in banking, the numbers are crazy. The amounts people were getting paid, the amounts hedge funds were making, even just the size of some of the I want to buy 50 million worth of Vodafone shares. I'd never seen anything like that before. I'd seen it in HSBC, the confirmations, but it was like bonds and currency transactions. So what it taught me is that there's money out there and there's some people making some serious money. And there's some companies out there making some serious money using the stock market. Using not just the stock market, but commodities, currencies, bonds. And I always was very curious as to how I could do that for myself. So at uni, I used to do all these trading games. I used to come first.
Okay.
Right? I literally used to come first. And I knew I had something natural that made me good at trading.
So when did you start investing then?
I started investing 6 years after I joined Goldman.
Wow. Okay, so based off of what you said, you've been doing all these trading games, you went into it. What happened? Because this is the thing, a lot of people are like, how are you guys working in banking and you don't invest, blah, blah, blah. So explain, what happened?
So if you wanted to day trade, so trading versus investing. Trading is you're trying to make quick money now that you can spend.
Okay.
Investing is I've got some savings and some of it I want it to grow slowly. I'm not trying to spend that money now. And they're completely two different skill sets and two different mindsets. So we knew about day trading, right? I knew about that. But when you're working full time for a bank, it's almost like unethical to also have your trading apps in the background and you have to declare it probably. Yeah. So it's a bit of that. But what I didn't know is what a stocks and shares ISA was. And that in the workplace, you don't ask people if they got bank accounts. You might not even ask someone if they've bought their own house yet, right? Because these things are just seen as standard knowledge. I'm sure you know how to buy a house. You save up, you get a deposit, you go to the estate agent, you go on Rightmove, you buy a house, right? I don't need to teach you how to do that. Most people are learning that when they get to the estate agent, that there's something called stamp duty and, solicitors' fees and all of this kind of stuff. Whereas the stocks and shares ISA fell into the same category in the circles that I was in. It wasn't spoken about, but most people had financial advisors and most people had index funds and most people were just doing this stuff anyway. It wasn't exciting. It was boring, but it's growing their wealth over time. So I wasn't introduced to that at all. And I had a lot of conversations with people and I was very, very well networked in the city. But no one ever spoke about the stocks and shares ISA. I found out about it by accident. Because when I left Goldman and I had to move my pension, I had to figure out how. How do you move your pension? What is a SIP?
Yeah.
What is Hargreaves Lansdown? You can pick stocks in your pension? Okay, I know how to pick stocks, but I just didn't know that I could pick it in my pension and I can do it in a stocks and shares ISA. And it's a tax wrapper. So I started that journey. I had a group on WhatsApp with just other friends in the city, investment banking, law. And I wrote there, guys, do any of you have a stocks and shares ISA? Nope. SIP? Nope. Have any of you even checked the value of your pensions? Nope. All right, cool. This is what we're going to do. We're going to start a social experiment. I'm going to show you every transaction I do with this amount of money. I think it was 5K. And either it's going to grow in a direction over the next 10 years and we're going to look back and see the results and be proud of the fact that I took you along that journey, or I'm going to lose a 5K, right? This is 10 years now.
Okay, before you get into Stock Pickers Academy, so I was on the private side of the bank, so we couldn't, we had access to information that would move the market, so obviously we couldn't. So on the public side, is it the same thing? You're not allowed to, or you just have to declare before you do it?
So seeing as I wasn't stock picking when I was at Goldman, I didn't actually know what the procedure was inside.
Okay.
I was at Barclays at this time.
Okay.
By the time I started actually doing this stuff, and you just had to declare it, get approval. Okay. So if Barclays was advising on a stock that's in the middle of a merger, then there's something called a restricted list.
Okay.
Where you couldn't, and then it also had where you couldn't buy a stock that was on a restricted list. So that's what the compliance check internally before you bought was. And then there was a minimum 30-day holding period. As an investor, I didn't care about that rule because I'm not really trying to buy and sell within a very short period of time anyway.
Okay. So, because there's quite a few people who joined this channel watching me whilst I was in banking, so who are probably in banking. So if they haven't invested, they might want to know that. So that's something you guys should check. Yeah. You know, if there's anything on a restricted list or if you're even allowed to, you have to declare if you're on a private side as well, you have to declare whenever, if you want to buy, if you want to sell. So just to put that out there. And before we want to move on, let me
add something to that. I've got clients who work in banking, right? And the question is 30-day holding, restricted. Some organizations actually stop you from picking stocks, but they let you choose ETFs and funds, which is why we've added that to, what I coach on. But one thing I'll say is don't let the red tape and the admin and the approvals that you need stop you from making the money you need. Because a lot of people, it puts them off and they just don't bother.
That was me.
Yeah.
That was me. Because I started a portfolio before I went into JP. And then as soon as they said this, I just closed everything down. And I was like, no, this is long. I'll just do property instead. Yeah. So that's really good advice.
Don't let that stop you.
One question I want to ask you is, and I probably know the answer to this, but do you believe that people can build wealth with a 9-to-5? So I'm going to preface this by saying we've had a few people come on and they have said you can't build wealth with a 9-to-5, but more so in the sense that to build wealth, you need ownership, right? So it's not that in and of itself, the job itself, it's not that you can't build wealth if you're someone who works a 9-to-5, but it's within the job itself. People are always going to come out and be like, oh, there's CEOs who are super wealthy. And those are 0.000%, if anything, of the people who actually make millions, for example. But I do believe that you can build wealth with a 9-to-5, but not necessarily always in your 9-to-5. And even if we look at banking, where people are able to make crazy loads of money, especially as traders, that's still a very small proportion of people who work in finance in general. But I wanted to pose that question to you. Do you think that people can build wealth with a 9-to-5? And if so, how?
Absolutely. There's two sides to this coin. It was so Stock Pickers Academy started in lockdown. Right. And prior to that, I tried to start another company, which was called TubeNav, which I joined. And it was basically an app like Google Maps where you click on a tube station and you can book whatever's nearby, whether that's a restaurant, cinema. It didn't work out. It failed. And a couple $100K invested into that. And it didn't work out. But if you've got time to think and come up with an idea, and you can come up with a minimal viable product or a concept of that idea, and you can start executing it on the side as a side hustle, and it starts to generate a consistent revenue, and you can strategize a way for that revenue to keep growing, then eventually you will get to a point where you leave your 9 to 5 and continue that journey full time. And usually that's at a point where what you're making is almost the same as your salary or even double your salary. Then of course the natural logical thing to do is to move. And at the same time in your 9 to 5, you're networking. These are potential clients, these are potential future investors, so it's definitely possible. I'll definitely challenge the notion that it isn't possible. You just need to have a good idea and then a good way of executing on that idea in a low to medium touch manner. And then the rest is how do you grow that? How do you scale that? How do you market that? How do you get more sales revenue, more profits?
And then obviously the other side of that is you can also build a portfolio that then grows to...
Yeah, there's another side of it where if you want to be a lazy investor because you're busy, there's nothing wrong with with being a lazy investor.
Yeah.
Right? In fact, there is a book called The Millionaire Next Door.
Okay.
I believe it's called. And what that book says is we've looked at all the millionaires in America and most of them have normal jobs, normal cars, normal houses, got married. And by normal, I'm saying, say 40, 50K jobs. Once you get there, you get married, combined incomes, let's call it 70K, 80K. You're able to have a few kids and pay for nursery and all of that, but still have enough to save maybe £300 a month into a stocks and shares ISA. Over time, you get promoted, you up that to about 600, combined incomes, savings, and that's getting put onto the stock market, the S&P 500 in a tax-free wrapper. And if you do that for 25 to 30 years, so £850 a month into the S&P 500 will grow to $1 million. If you're able to ever hit that number and continue it for 25 years, you can become a tax-free millionaire. So what that book was really saying is building wealth isn't about having a lucky break, winning the lottery, being in a very, very high paying role, because there's also lifestyle inflation. But there are lots of average, normal people leading normal lives who actually represent a significant proportion of the number of millionaires in America. So you can build wealth like that.
Exactly. So now let's get into that. So you were talking about like the Stock Pickers Academy. So let's go more into that. How do people then go around building a portfolio, the stocks and shares ISA? What is it? What are they adding into this ISA?
Okay. So the S&P 500 index.
Also, can you also, if you know the American versions, because we actually have a lot of American listeners, if you can do that, because I think theirs is like a Roth IRA or whatever. Yeah. So if you can like speak to both audiences, that would be great.
Yeah. So each country, most countries should have a tax wrapper, an investing account where you invest in it and you don't pay taxes on it. So I think the Roth IRA is the equivalent of a SIP.
Okay.
And then there's another type of account that's the equivalent of a stocks and shares ISA.
Okay.
I think it's called the 401k. Okay. Or maybe I've mixed it around the other way around.
Yeah.
But either way, and here's the thing in America, it's $7,000. That's the maximum you can deposit each tax year.
Oh, that's quite low.
In the UK, it used to be £7,000 in the UK.
Oh, is it?
Yeah.
And then it went up to 20,000.
It went up to 20,000. And I have this theory that as financial literacy, investing literacy becomes more prominent,
they're going to reduce it.
They're going to reduce it because it makes sense. Who's going to drive the buses? Who's going to clean the toilets? If everyone literally is just parking their savings into the S&P 500.
Say that again, because I think that would be... So you have a theory that...
I have a theory that the maximum allowance each tax year will eventually drop as more and more people become financially literate investing literate, especially with the stock market. Because the whole population, and this is my theory to why I think it's not being taught in schools. Because if every child, when you were born, had a stocks and shares ISA opened and X amount going into the S&P 500 index fund every month, you're 50 to 60 years, 2 generations away from a significant number of millionaires in the country. And then who's going to do some of the lower paying jobs? NHS is going to struggle. Cleaners, bus drivers. And by the way, all these people are still my clients. They are wealth building with me, right? I'm just saying it from a point of compared to some of the higher paying jobs that we've got in this country.
Yeah.
The economy is going to fail.
I hope you guys are enjoying this content. If you are, please don't forget to hit the like button and subscribe. If you're committed to building wealth with no borders and want to invest in a property in the UK or in Dubai, feel free to send an email to lamideelizabeth@gmail.com and I'll be sure to help you. If you're not quite ready to invest yet, check out the affordable video courses down below that will teach you more about property investing and money management. And if you're thinking of relocating to Dubai, setting up your business, breaking into certain industries, getting a visa, check out the Professional Network. The link will be below. Wow. Okay. So what's the S&P 500?
Okay. So S&P is a company. And that company decided to put together a list of all the companies in America. And a company can be split up into a number of small pieces. So you can take a company, divide it by 1,000 pieces and say each share is worth $10. That company is now a $10,000 company by share value, by stock market value. Now you've got private companies and you've got public companies. A public company is the equivalent of, let's say you start a drinks company and you put those drinks and you list them on Amazon. That's a public company. Let's say you make drinks in-house and you give it to the neighbors, but everyone knows you for that drink. You charge them, but that's how you make your money. That's more like a private company. People can't just buy it from a site like Amazon. Now in the stock market, that's the stock exchange. The stock exchange is where companies get listed, and once it's listed there, you can buy shares or small pieces of that company. Now, S&P, what they did is they listed all the companies in America. And then what they did is they calculated the share value, the stock market value of each company, also known as market cap. So the number of shares in the company, and then multiplied by the value of each share. And then they ranked it from top to bottom. And that index, by the way, if you look in the thesaurus, is the same as a list. The words are interchangeable. So now you've got this list of stocks, maybe 10 to 15,000 stocks. And you then take the biggest 500 or 100, because there is such thing as S&P 100, S&P 500. But they said, you know what? The one the sweet spot is if we look at the top 500 companies. And that is going to be the benchmark for companies that represent America. And the way you can invest in it is someone else needs to step in, turn that list into a ready-made investable portfolio by buying a piece of each of those companies. It's like 500 transactions. And then listing that ready-made portfolio on the stock market. So that all we need to do is just buy a piece of a ready-made portfolio, right? So the concept here is I can own a bit of America, £50 worth, £10 worth, £1 worth, and I can own a little bit more each month through setting up a direct debit. So the S&P 500 index fund is a way to invest in America, take a small piece of all those companies without having to go out and do the work of doing 500 transactions each time. it's a little bit like, let's say a stock is a fruit. An index is like a smoothie. You can go out to Tesco or Waitrose or Asda or Walmart and you can buy a smoothie. Or you can buy all the individual fruits and make it yourself. One is hard work. The other one is easy.
Right.
So passive investing is hands-free, opening up an ISA account if you're in the UK, or a Roth IRA, or a 401k, and then selecting S&P 500 index fund, setting up a direct debit into that. Now, why would you do that? 2 reasons. The first one is inflation. If you got £10,000 today and you could buy £10,000 worth of products, in a year's time, if inflation is 10%, you would need £11,000 to buy the same products that you could buy for $10,000 a year ago. Why? Because outside has become more expensive. And outside will keep getting more expensive. Inflation measures how quickly that's happening. So 10% means in a year, it would have grown by 10%. So that's one argument for investing, to fight inflation, to protect yourself against inflation. Because if you leave £10,000 in cash under the mattress, in 1 year's time, it's still £10,000. It hasn't grown, but outside has grown in the prices of things that you might actually pay for. Okay, so that's one argument. The second argument for investing is, the second reason why you would invest is for your return. So if you look at the history of the S&P 500, it's about 120 years old, this particular index. And if you had £1,000 120 years ago and you kept it for 120 years, the amount that it would have grown to, I don't know the number off my head, but call it 2 billion or something like that. You can calculate how much that £1,000 has grown by each year. And the mathematics says it's 10%. So it's grown by 10% each year to reach that 2 billion or 100 billion number. So because it's been, I'd say 40 years of data is enough to say the trend will continue. We've got 120 years of data to show that it's average 10% per year. So if you take
the S&P 500, that's a fact. The
yes, S&P 500 has grown by about 10% a year, in spite of World Wars II, pandemics, the Great Depression, everything history has thrown at it. Last year alone, there were 55 new record highs hit. Last year alone, which means it was hitting historical highs. There's 52 weeks in a year. So if it can do that during a cost of living crisis, the world isn't a great place right now, then it can keep going. So that assumption that we can continue to average 10% means that if you put £100 a month for 25 years at a rate of 10% growth, it will grow to £124,000 tax-free.
And that's also for the people who, because by the way, I hated markets. Like I hated the trading floor. I was like definitely not going to that side of the bank because everything to me felt so intangible, which is why I was on the corporate side dealing with companies and like mergers and acquisitions and stuff, because that stuff conceptually it made sense to me. And that's also why as an investor I'm more into property than I am into stocks and shares and stuff like that, because for me everything seems so intangible. But when you actually look at what's actually happening, there's like something tangible is happening, right? So when you're saying these things are growing, what's happening with the underlying companies is that the idea is that those companies are growing, right? Or can you explain that? So for the people who are like me, who are like, what's all of this stuff?
Why would it keep making 10%?
Yeah, exactly. Explain
that. We all buy iPhones. So imagine everyone buys a new iPhone, or a lot of people buy a new iPhone in a year.
Yeah.
You spent money. Apple now has that cash. That cash gets added to whatever the value of that company was before, right? So it has become a little bit more cash rich because they're making a profit on every iPhone that gets sold, right? So over time, companies that perform well are growing in revenue, are growing in profit, right? And on a very, very basic level, you can say the value of a company today versus tomorrow is how much more money entered the accounts as profit, right? And it can grow by that 0.0%, right? If you look at it that way.
Yeah.
Then there's some other things you can do. A company can hire more staff, research, development. It can acquire the best companies, hire the best talent. We all know about this. Likewise, the biggest and the best companies also acquire other streams of income. So as individuals, we're always trying to find another stream of income. So are these businesses. If a company is already making a profit every month, every year, and Amazon buys that company, that is now another stream of income. So they're always looking for the best company to add to their income streams. And if you keep doing that over time, your value as a conglomerate will just keep growing. But also the S&P 500 has this concept of relegation and promotion.
Okay.
So if you're not cutting it, the company will fall out. Like Intel recently fell out the NASDAQ. So the NASDAQ 100 is another type of index fund, but it's the biggest 100 technology companies in America. So global companies around the world can actually list their companies on the NASDAQ. And there's some criteria that have to be met, but I'm not going to go into that. But the NASDAQ, if you ever heard the NASDAQ 100, is the biggest 100 technology companies, right? So what we do know is if you don't know anything about the stock market, but you open a stocks and shares ISA and you set up a direct debit into the S&P 500, you'll average about 10%. The S&P 500 is another way of having a savings account that pays you 10%. That's the way you should look at it. And you don't need to open your portfolio every day and check it. You don't even need to check the news, right? It's no different to just having a normal savings account.
Can we quickly cover some of the other financial instruments? I don't know if you could call them that, but things like ETFs and stuff like that are quite popular. If you could just, give us a whistle-stop tour explaining what those things are in context to what you've just explained.
Yes. So historically, if you wanted to invest in the S&P 500, you had to go through something called a mutual fund, which is basically a fund manager buying those 500 stocks for you, right? So there's no, you're not going to buy it yourself. You're paying someone to do it for you. And they would buy the stocks. And then if it goes up by 50%, let's say you had 10K. When you look at the back of a smoothie, you see all the different percentages. Apples, bananas. The same with index funds. Apple might be worth 2% of the S&P 500. Meta might be worth 0.5% of the S&P 500. So when you look at your £10,000, 2% of that is £200. And then 1% of that is £100. So you might only spend £50 on Meta, £100 on Apple, until you've spent enough to get all the 500 companies. That's a mutual fund. An ETF is where the world went electronic a little bit. So with an ETF, it's exchange traded fund. There's no fund manager managing it, rebalancing it. An ETF is the modern way of investing in the S&P 500. So you actually have the S&P 500 ETF versus the S&P 500 mutual fund.
Oh, okay.
Right?
Okay.
It's just a methodology on how you invest. But S&P 500 is not the only type of index fund. You've got the NASDAQ 100, you've got the FTSE 100. So the FTSE 100 is the UK equivalent. It's the biggest 100 companies in the UK. Bovespa, Brazil. You have the DAX 40, which is Germany, the CAC 40, which is France. So every single country has its own family of index funds, because there's also something called the FTSE 250, which is the next 250 biggest companies in the UK. Then you got the FTSE 350, which is a combination of the FTSE 100 and the FTSE 250. In football terms, it's like the Premier League and the Championship combined into one league. And then you've got the FTSE All Share. So each country actually has its own family, but also its benchmark. FTSE 100 is the benchmark. S&P 500 is the benchmark.
Okay. So 2 more things. One, so your academy is called the Stock Pickers Academy. One of the reasons why people tell people to go for ETFs is because the idea is that you shouldn't be picking individual stocks because what do you know? Just go for an ETF. Why is your academy called the Stock Pickers Academy? Why do you, I guess, advocate for stock picking? And yeah, how should someone who is watching this, maybe who is a novice, should they be stock picking or should they be going for, a basket of funds instead?
That's a really good question. I felt that the stock market was one asset class that was getting left behind, especially by low-income families. Everyone knows property. Everyone has kind of started to figure out how to start their own business. But the stock market, I felt, was hidden from you if you were not an elite company or around the elites, upper class, maybe you can argue a bit of middle class as well. So I wanted to lead with stocks. But we actually, as you know, in the group, we talk about everything. We had like an hour, 2 hours worth of property discussion the other day, crypto, art. So with the stock market, I feel like, what is it? You are becoming an entrepreneur without having to start your own business. By owning a share of Apple, you are an entrepreneur. But you're owning part of a business that's already doing well. You're an angel investor. And I say to people on my course, when you're picking stocks, it's like Dragon's Den or Shark Tank, as they have in America. The stock is pitching to you, and you're the one deciding which of the stocks is going to get your money for a percentage of the business. And once you start looking at it like that, you realize that you have to be picky, right? So many businesses come and pitch to these founders on these dragons on Dragon's Den. But how many actually get the money? You have to watch so many episodes before you see one where the dragons say, I'm going to invest. You have to be the same with the stock market. Now, I happen to have worked in a hedge fund environment where we build quantitative models, right? I've seen millions get made in a day consecutively for a year, right? And by doing that, I've realized you can take emotions out of it and you can actually come up with a strategy. So I built a strategy that combines what I learned at Goldman, the hedge fund, Barclays, where I worked in treasury, and I worked in the Jewish family office. And I've taken the best bits of all those 4 different ways of making money to create my own strategy that I've been using for a decade that has averaged 29% a year. So outperform the S&P 500 because that's the aim. And then I've simplified it and made myself available to mentor people who want to use that strategy. So I believe the individual can become more empowered to actually build their own wealth using the stock market. And what you have is some people will do both. Some people will have a direct debit going into S&P 500 that we know is going to average 10% and build wealth over time. And then they have another portfolio where they might just pick 2-3 stocks, 3 or 4 stocks. So we identified a price of Meta, for example, at 100. It's 700 today in about just over 2 years.
Yeah.
Tesla, since August, there was a price identified there that was reasonable because my prices are safe prices, right? My investing style is cautious, but there's a way you can be quite cautious and not invest all your capital at once and have a whole strategy around it.
You have this huge spreadsheet.
Yeah, I've got this real-time spreadsheet of
crazy things.
It's got ETFs. So the last ETF I bought was something called eCar. So it's electric vehicles. And it will have a bit of Tesla, a bit of Nvidia, right? It will be a diversified portfolio. But sometimes these thematic ETFs behave like stocks. So when the pandemic happened, the price dropped from 7 to 4. At that point, I knew that this was a potential 100% opportunity. And it turned out to be the case. I bought some at 4, I sold some at 8. I haven't touched it since. So I will go to ETFs when I see price behavior that can make it a credible long-term investment.
Yeah.
But what I've found with some of these thematic ETFs is they don't do what they say on the tin. So something fancy like cybersecurity.
Mhm.
You'd look at the ETF, you'll look at the price and you think, oh yeah, let me invest in cybersecurity, but let me be safe about it. Let me go and invest in the ETF. Then cybersecurity starts doing really, really well.
And it's not reflected.
You go to your ETF and it's up 12%. Whereas CrowdStrike has doubled in price and, you know, some of the other actual cybersecurity stocks have done really well.
Yeah.
So actually, maybe it might have been better to pick 2 of those stocks.
Okay.
And just allocate a smaller amount of capital to it than you would to an ETF. Because most people allocate more to an ETF because it's a diversified portfolio. So it's on paper safer.
Yeah. Okay. So if people who are watching this, let's say they are business owners, they're working in corporate right now, and they're like, okay, you know what, I haven't even started building an investment portfolio. What are some very tangible steps that they can follow to start building out their investment portfolio?
I think as an investing coach, my job is even to help you choose a financial advisor. I think everyone should have a financial advisor, right? But how do you know what's a credible financial? A lot of people get intimidated by the thought of having a financial advisor. There's some people out there who would never buy a Ferrari even if they could afford it because they don't want to be seen as wealthy. They don't want something that's loud. And to some extent, some people see the financial financial advice industry the same. They don't want to be seen as a financial advisor. I'm not even a millionaire. So this is where we need to start dispelling these myths. As an investing coach, my job is to educate. And actually, let me explain the difference. A private banker is your banker. He might refer you to a wealth advisor, or he might get some research from a wealth advisor and so on. Then you've got a financial advisor. He's looking at your money from a holistic point of view, right? But he might not educate you. He might just say, would you like index funds? This is what they've returned. If you don't understand that, you're going to say, is it more risky than bonds? He's going to say, yeah, it's a bit more risky than bonds. And this is how they performed. But you haven't had this explanation. Compound interest and the numbers and, S&P 500 has been around 120. They're not going to do all of that. Investing coach will help you choose where to go, but will also educate you, right? And even mentor you, right? You do need all of them at some point in your journey.
So seek out someone who is experienced, basically.
Seek out someone who's experienced. Seek out an investing coach, right? Seek out knowledge for yourself a bit. Follow some finfluencers on social media. There's a great app called Finimize. We're partnered up with them. So they explain everything to you in a bite-sized manner. They have like these online events as well. I think it costs like £40 for the year or something like that. But I don't really use the Financial Times anymore. I just have my Finimize app. Right? It's the modern day way for the individual investor to learn things in a bite-sized manner. So when it comes to the stock market, I would 100% advocate for index funds. And by index funds, I specifically mean the S&P 500.
Okay. What apps would they download?
If you only want to do the S&P 500, you can do it on Vanguard. But Vanguard is like Nike. You can only buy Nike trainers in Nike. But then there are other platforms like Hargreaves Lansdown, which is more like a Sports Direct or JD Sports, where you can buy other brands. So on a Hargreaves Lansdown or Trading 212, you can buy Vanguard product. You can buy the S&P 500, the Vanguard version, S&P 500, the BlackRock version, and you can also buy individual stocks. On Vanguard, it's not really big for individual stocks. They might have one or two or none, but specializes in Vanguard products. My personal recommendation, the one I use, is Hargreaves Lansdown because it's got their SIP. It's got your junior ISA if you want to open that for your kids. We've got your stocks and shares ISA. And it's also got this linked account feature if you want to see other family members' ISAs in one go when you log into your own, which some of the others don't have that capability. Right? Some people use AJ Bell. So I'll say, starting from scratch, choose a platform. S&P 500. Set up a direct debit. That's your starting point. As time goes on, and you get comfortable with the stock market and you realize that it's never really crashed and it's kind of done what it said on the tin and it always keeps on hitting new highs, you might say, okay, I feel comfortable now to buy 1 or 2 stocks.
Okay.
Where can I go? Stock Pickers Academy.
Okay. And we will have, or if you want to offer them like a special discount code for your course.
Yeah.
Yeah, I'll put it in the description box.
Okay.
Yeah?
Yeah.
Is that okay with you?
Yeah, it is.
Yeah, okay, cool. Okay, so if you guys want to have, personally, I'm going to say something might be a little bit controversial. I'm not a big fan of some financial advisors, because I feel like a lot of them are they know, not all of them though, but a lot of them, they just kind of know what to say. I prefer people who are practicing what they preach. I don't even like qualifications and stuff. Well, you're qualified in the fact that you're a trader, and obviously you've been helping coach me on like certain stocks to get and stuff like that.
Yeah.
I would trust you more than I would trust a financial advisor, because a lot of them that I've seen know what to say because they are told what to say, but don't actually practice what they preach. So I'm very much like, exactly. So I'm very much like, for someone like me in my situation where I'm between multiple countries and stuff, I do have to speak to financial advisors, more so kind of like on a tax advisors on what to do and stuff. But I agree with what you said in terms of going to seek out knowledge. He's giving you all the platforms and stuff to download. And then if you want that deeper knowledge, his course will be in the description box with a link for a discount code.
There will be a discount code. 20% off.
Okay.
Yeah. Now you have to put it there.
Exactly.
20% off. Do you know what? Can I actually add?
Sure.
So I have financial advisors as my clients because financial advisors actually can't give you advice on individual stocks.
Okay.
They can't advise you really on angel investing. They can tell you about SICE and ICE, but financial advisors can't advise you or educate you on crypto. So what happened is a lot of them started to get a lot of demand from their clients. And it's like, well, I can't, but I know a guy.
Okay.
Right? So what I do is that niche of what everyone else is not legally allowed to do.
Amazing.
But I'm not going to say, go and buy this, go and buy that. I will educate you on it and let you know if you are going to buy it, don't buy highs and don't break this rule and don't break that rule. So I'm actually stopping you from losing money and making really bad mistakes and giving you a strategy that you could apply, but then making sure you don't do it with too much of your capital, right?
Okay, that's good. That's good to know. Okay, so we're going to be moving on to the wealth woe segment, and that is when one of the listeners sends in a dilemma that they're going through, and they basically just want your advice on what they should do. So I will read, and if you guys want to send in your wealth woes, just check in the description box. The link will be there to submit it anonymously. Okay, so this person says, I'm currently pursuing my 2nd degree in finance, and I'm really struggling to balance saving and emergency savings for when my parents need money. I work on campus and have a bursary, but I'm really struggling. How do I navigate this?
Wow. Working on campus, of course, will give you a bit more income. But there's no easy answer to this. I think the key thing is actually to think about your mental health, to think that you're not doing too much at once. Obviously, you have taken on a big commitment. There's a statistic for you. 1 in 4 UK adults with a mental health problem also struggles with money. And it's really important to think about this when it comes to taking on too much. I know we're all trying to get from A to B and become wealthy one day, whether that involves extra studying, extra working, but we do need to think about the fact that we don't want to burn out, and it's okay to take things slow and only do 1 or 2 things at once. In short, I would say just think about your mental health and think that you're not doing too much. And you might find that you can't save as much, and that is okay. So don't let that worry you either.
I was gonna say, obviously on this podcast we talk a lot about building wealth, but also with that, there's a season for everything. And as a student who's pursuing your 2nd degree, your major, like the fact that you're already doing a finance degree, right? That's already working towards your strategy of building wealth, because you're gonna be able to leverage that to get better jobs, etc., get better opportunities. And sometimes, being a student, no one, like, you don't typically hear of students being like super wealthy, super rich, because at that point in time, most people are struggling to save, right? You're not necessarily earning. Yes, you've got a bursary, which is good. You're working on campus. You're doing the best that you can. So I wouldn't be super duper concerned with, oh my God, I need to save lots and lots and lots of money. If you can, great. And I'm a big proponent of telling people, especially people who you're doing a finance degree, people who can work in finance, when it's summer holidays, spring internships, get those internships, because you get paid good money to do that. Like I said before, a lot of you will be new to the channel actually. I did a 10-week summer internship at JP Morgan and I got paid £10,000 for 10 weeks. That was enough to take us alongside the money that you get from student finance, etc. That was a lot to even just take me through that year. So maybe you can't necessarily focus on working at the same time that you're studying, but when you do have those breaks, that's when you can focus on actually making money. But I think what you said about mental health is quite interesting. I don't know if you want to maybe even elaborate a bit more on that relationship between money and mental health. But actually, before you do that, I do think this is a big issue constantly comes up with parents and money, especially within, I guess, the African community as well, where a lot of the burden of like why it's for me it's like it's something that I really do not want to put my children through, because why is a child in university trying to get themselves through, trying to do better for themselves, and then still have to worry about what their parents are doing and how their parents need money? And that was me like throughout university. And I just, when I think about it and I see, how other people are raised with their parents, and they are just able to be a child and just be a student without having to worry about their parents. But, some of us don't have that benefit. I don't know if you have any comments on that. One thing that I always tell people is you're going to have to set boundaries sometimes with parents and stuff, because a lot of the time they will figure it out if they realize that they can't always rely on you. And like I always say with parents, like set up standing orders if you can, have like a particular thing that you are contributing to at home rather than just giving money as and when, because that allows you to kind of be in control and they know what to expect from you. But you do have to set boundaries. It's just like, like when you're on the plane and they will always tell you, even if you have your child next to you, you have to put on your own, what's that oxygen mask. You have to put on your own oxygen mask first before you can help the person next to you. And sometimes, unfortunately, I think we have to set those boundaries with our parents as well.
Yeah, I think every unique case is different. Like my parents came to the UK with nothing. So in their 20s, in their 30s, they weren't traveling the world. They weren't going to, high-end restaurants, fine dining, and they sacrificed a lot to enable us me and my two brothers to be in a position that we are in today. My older brother is an aerospace engineer. He's been in that for 10 years. My younger brother is a trader. He's been doing that over 10 years. We've all done, really well. But then you've got some parents that don't ask. And some children are not actually capable of reading the room and realizing and offering, So yes, there are some parent-child relationships that are a bit toxic, and it does become a bit of a problem. And there are others where even as a child, you should be thinking how you can, help your parents. Like my parents are both retired now, like from this, like they've retired, and there is some financial support that they may or may not need. But I'm always going to be open-minded to that as long as it's, within reason, and my parents are reasonable. Some parents are not reasonable. And talking about mental health.
I was about to say, let's link that to mental health, yeah.
Some of our parents have had mental health issues with money, with the sacrifices that they've made. And some of that has led to some of the toxicity that some parents do have towards their children around money. And I don't think we look at things from that angle.
So explain that. What's like a tangible example of that?
So 50%, here's a stat, 50% of people in problem debt also experience mental health issues, right? So aside from the money side of mental health, we're talking ADHD, dyslexia, some of the neurodivergence, some of these things that we're now learning about today. A lot of when you now look at your parents' generation, you can start seeing these traits, right? And what this can do is help children that are struggling with that relationship with their parents is, number one, the parents are not going to be here forever. right? It's a period of time where if you can help, you help. And then there are some people who are struggling with looking after parents who are ill. So that's a non-financial, I don't want to say burden, but I'll say challenge. And I think ultimately mental health is a topic that's very broad, but also becoming more and more important by the day. So understanding and, trying to understand and diagnose, the adults in your life will probably help you change your mindset towards certain things. It's not just a black and white, give me money, do I have enough money? Sometimes it's an ebb and a flow. You might go through a 3-year period where there wasn't that pressure, and then you might go through another 3-year period where there is a bit of pressure. And I think ultimately communication is the most important thing. Communication and empathy. If you don't have it, then you shouldn't force yourself to go into debt to give, and it's just thinking about things like that.
I think that's good. I think that's what it boils down to at the end of the day, communication. That's what I would say, like, have a conversation with your parents and like, I'm a big advocate of like picking up a particular bill if you can. Like, is there something that I can take care for you? Is there a certain amount that I can send you every month that I feel comfortable with, that's not going to cripple me, that is also of a big help to you? Because like you were saying, I'm also a big help of helping my parents. My mom has been on standing orders for a very long time. But I feel like that's just the easiest way to not have continuous like problems. And also, as you're saying with parents having mental health, you also don't want to get to a place where, because your parents are requiring so much of you, because I have friends like that, they are going through their own mental health issues because it's like, my parents are requiring so much of me, I don't feel like I can live up to what they want me to do. So yeah, I think that's actually really, really good advice, and super practical as well. So yeah, that's great. Okay, so we're going to move on to the quick fire money question. So I'll just ask you a question and then you just answer it as succinctly as you can. So what is the best investment you've ever made?
Oof. Is this the best investment or the one that's made me the most money?
You can do both. So
the investment that actually made me the most money was I consulted with I'm Just Bait, which is a meme platform on Instagram. And they wanted to launch a crypto that had a use case where you're using it to spend on tokens where they've got like boxing fights and stuff like that. So being part of the team building it, you can get like an allocation, a bit like investing in Apple before it went to the IPO. An IPO is initial public offering, the first time a stock ends up on the stock market.
Yeah.
But the private investors would have been there before that moment. So it's that concept, but in crypto.
Okay.
So I got given an allocation, I think £2,000, and I didn't want it. I thought, why am I spending But I got convinced to take my allocation. I think I split it with my brother. And then when the coin launched, it was worth like 70,000.
Wow.
Yeah.
Is it still going?
No.
Okay.
So with a lot of these utility tokens, they rise. And then as time goes on and the utility starts, they just drift down.
Did you bank out at 70?
No, I backed out at 50.
Okay.
Yeah. And that was when I was like, okay, I need to wake up to the world of crypto properly.
Okay. And what was the other investment you were going to say?
One in the stock market.
Okay.
There's a company called IZEA. Again, similar to crypto. And here's the thing between stocks and crypto. You can see the same patterns where stock pumps and then drifts back lower because of cash burn, right? So with IZEA, they're influencer marketing company. And like I say, I always post every transaction I do in my group. So everyone saw when I bought it. And I think I invested 3K and it went to 30K.
Wow.
Yeah.
Did you bank?
I banked probably at 20K when it was on its way back down.
Okay.
And there's always a chance, whether it's stocks or crypto, for you to cash out. There's always a chance, With the meme coins, a bit different because you can get scammed or rug pulled. But with the utility ones or the projects, you can actually get at a reasonable price. And it's just a case of how much profit were you able to get out of that before you find another one.
Okay. That's fine. What is the biggest money mistake you've ever made?
I've lost 20 grand in a day.
Oh.
I've lost more in a day actually, but yeah. And this was I've been scammed before.
Oh.
Imagine that.
From who?
So I went into the world of binary options, and I understand options because I used to trade them at Goldman, and I used to trade options. But if on the private side, on the retail side, you're trying to make money yourself, there's some things you got blind spots. So for example, trading apps that are not domiciled and protected by the FCA could be in Cyprus. So had this guy tell me he could educate me about binary options. I followed the training and it made sense. I saw the signals, it made sense. I said, okay, I see what you're doing. It makes sense. I see the signals. I'm going to give it a go. And the way it works, you put 5K in. And if you put 5K in, they give you an extra bonus of 4K. But to be able to sell and take your money out, you need to have done a certain amount of transaction volume.
So that sounds dodgy though.
It does sound dodgy because it means that you need to be in profit after all those transactions.
Yeah.
Right? But I'm a scalper. I knew that I'd be able to hit the volume.
Okay.
Where it's unlocked, which I did. So within 3 weeks, 5K turned into 40K.
Okay. And
then it was time for me to withdraw.
Ooh.
And this guy who was my mentor, he's mentor. Listen, we were doing trades. What I didn't know is that they'd kept my money and what I was seeing was the demo. Right? So the trades were still legit if I'd done them in an account that wasn't demo because it's, the price of a currency is here or gold is there. It went up to there. You bought there. You sold there. So I was actually making the same money I would have made if it wasn't a demo.
Yeah.
But they were probably keeping it behind the scenes.
Okay.
Right? So when it came to withdraw, and by the way, I didn't know it was demo until I
wanted to withdraw.
Right. And he to this day, he never admitted to me that it was demo.
So what did he say?
So he was like, oh no, you haven't hit your volume number. I'm like, screenshot here. Like, oh yeah, you have. He's going to, it was escalating to management until I realized
you got scammed.
That I got scammed. Right. And then the next day, the Skype, it was like you got blocked.
It's gone.
My account went to 0. And I kind of knew what time it was.
Yeah. What's the lesson from that? So how can someone avoid that?
Some of these are really good scams. So one of my clients got scammed out of 200K on a crypto scam. And what they used to do is you'd put money in and it will yield you something every day, like 3%. So you're seeing your money going up. So what she did is, I think she started with 5K.
Yeah.
It grew to like 11K. She withdrew her 5K. So she saw the money back of her initial investment.
And then she thought, oh, this is good. Let me do
this
it again.
is good. So what do? You scale.
Yeah.
Now you've seen that your money can come out into your bank account. You then go and she went to put 150K in. And then it started to grow as well. And then they got hacked. The classic.
Yeah.
We've got hacked, everyone. This is a very stressful time for us, blah, blah, blah. We've been hacked. Which basically means they've taken your money and
they've gone.
Faked the fact that they've been hacked.
So how do we avoid that?
Number one, community. You have to be part of investing communities. I've made more money by the community, from the community that I built, than I would have made if I was just in my room with the knowledge I had. Because people will always bring new things. So before buying anything, I tell my group. And that's the rule. Before doing anything with your money, buying a house. So before buying a house, by telling the group, I would have been the one, because I'm an interest rate expert, saying, listen, interest rates have been low for 11 years. There is a higher probability than not that interest rates will start to get hiked within the next 3 years.
Okay.
That's not me being Nostradamus.
Yeah.
This is me applying logic and what I know about the interest rate curves that I see behind the scenes. That advice meant that if you got offered a 2-year fixed versus a 5-year fixed, you're going to take the 5-year fixed when rates were low instead of the 2-year, right? That's it. Okay. And by doing that, a lot of people were able to save so much money when rates got hiked. And obviously now the 5 years is kind of expiring, but that 3-year period, just by being in a community in the right environment, you were able to tap into knowledge and have discussions around these things.
Mm-hmm.
So likewise, when Hyperverse started, that was another one. We did the group is a due diligence group, whether it's angel investing, whether it's stocks, whether it's crypto, whether it's these random projects, we're going to discuss it. We're going to rip it to shreds. And then we're going to know, is this a 1 out of 10 opportunity or a 10 out of 10 opportunity? And based on where the number is on the scale, you can still invest in it. Yeah. At least you know what you're investing into. At least you know the risks. So I'll definitely say join communities. Find someone you trust that is an expert that you can ask the question if you don't want to join a community. Yeah. Check Twitter for reviews. If you put a stock into Twitter or a crypto or a project into Twitter, it's like a search engine. You will see the comment, you will see the tweet straight away. This is a scam. Be careful of this platform. Okay. Even Google, right? Yeah. Be careful of this platform. They're domiciled in Cyprus. So definitely do your due diligence. I don't like the whole do your own research. How does a beginner know how to do their own research?
Okay, right? We need to move on to the last question because of time. So the last one is, what is one piece of advice you'd give to someone trying to build wealth?
Education. Okay. Whatever it is you're using, whether it's property, whether it's stocks, whether it's crypto, whether it's art, be educated. Surround yourself with, buy that course, right? You see the Americans, they collect courses how we collect books.
100%.
They don't say, oh, that book, over here, we buy books and don't read it. We don't say, oh, that book was a scam or that book was because the price point is lower. But the Americans, they buy courses that they don't ever take. The way we buy books that we don't ever read. Because they understand that that's just an indication from the perspective of one person. Yeah. Right? So definitely get educated. And if you can, get mentored. Get someone you can, bounce off as you're going along. And the last one is something that I've personally seen work for me and for others in my community. Document the journey and take people along with you on the journey.
Oh, that's nice.
Yeah.
I like that. Let's end with that. Thank you. Thank you so much, Debodun. I think there was so much information packed in that episode, and there's very practical steps for people to follow as well. Yeah. And guys, don't forget to check out the link in the description box. Where can people find you?
LinkedIn, Debodun Osekita, Instagram, Coach Debs, Spot SPA, or Stock Pickers Academy on Instagram. And the links for my programs and Telegram groups and stuff there is a free Telegram group, but it's in the bio on my social media.
Amazing. Thank you.